Okay, I'd like to present us about the issue concerning about the principles of accounting 1. Let's start. In chapter 1, we will see the introductions to accounting. What does that mean, accounting mean? So, accounting, by its definition, accounting is an information system that provides reports to users about the economic activities and condition of a business. Simply, it is an information system. Accounting provides information to the user. These users are the internal users and the external users. Let's issue about the users of accounting informations later. So the accounting identifying, recording, modifying, presenting the economic activities and conditions of the business. Let's see the types of business. Generally, there are 3 types of business operating for profits, including service, merchandising, and manufacturing business. Let's see the difference between each 3 types of business. For example, let's take the service providing business. In a service providing business, there are business that only provide service rather than products to customers. These service rendering businesses provides only service. They does not purchase something for reselling it or not or others, but they only provide service. For example, Ethiopian Airlines gives service for transportation. It provides service in inland from Addis Ababa to Awasa, from Addis Ababa to Bahar Dar, from Addis Ababa to Jimma, and it gives also transportation service from the country to other country like Dubai, America, Canada, etc. So Ethiopian Airlines provides transportation service. It gives a transportation service. Let's take Entoto Park. Entoto Park. As you know, this park is established in recently, and it gives service to its customers, entertainment service. In entertainment service, the customers can go the park and they praise themselves and with their friends and relatives as the weekend special. The other types of business is the merchandising business. This merchandising business sell products they purchase from other business to customer. First, these merchandising businesses purchased from other businesses or from wholesaler. Then they provide their products to another customers. That means this merchandising business can be either retailer or home seller. So especially the merchandising businesses are purchased their products from manufacturer or manufacturing firm. For example, Durre merchandising firm purchase electronics and other materials from the wholesalers or manufacturer and resales to their customers. Amazon.com provides internet book, music and videos, and you can list many types of merchandising business. Let's take the third and the last types of business is manufacturing business. In manufacturing business, they change the basic inputs to output products that are sold to customers. They can change the raw materials into products and sold to the customers. Generally, the merchandising firm can sold to the wholesaler or directly to the customers. For example, the National Motor Company manufacture cars, trucks, vans, and others. Latex Compota Textile Factory, which is located in Desi in Amhara Regional State, and produce blanket. Actually, they produce blanket and can export to the foreign. Let's see the users of accounting informations. Users of accounting informations are grouped into two major groups. The first one is that the internal users. The internal users includes managements and employees. These users, managements and employees needs accounting informations to plan or to adjust, especially the management information, the accounting information systems are relevant for management in decision-making process. The next one is that the external users. In the external users, government is external users. Government specially controls and monitors how the firms are going on the benefit of the public or people. The creditors needs accounting information systems or accounting information to know the current status of the firm, whether they decide to give credit to the firm or not. Investors at the same time needs accounting information in order to that enables them to decide whether they invest their properties or capitals to the firm or not, including the customers. Customers needs accounting informations. Customers want us to know the current conditions of the firm. So accounting provides such information to customers. All the governments, creditors, investors, and customers are the external users of accounting information. The next one is that the accounting equation. Accounting equations is an equation that expresses the asset in terms of liabilities and owner's equity. This is the accounting equations. Assets equals to liability and owner's equity. What does asset means? What does that mean, liability and owner's equity? Let's see. Assets are resources owned by a business. Owned by a business. This is an asset. For examples of assets includes cash. It has owner. It is owned by the business or the firm. Land, also a asset. Buildings and equipments. All these are the assets. Actually, asset can be current asset or non-current asset. They may be long-term or current assets. We will see more about the assets in the next presentation. The rights or claims to the assets are divided into two types. One, the right of creditors and the rights of owners. So, the right of creditors are debts of business and are called liability. So, liability means the rights of creditor. The creditors has a right to own the assets if the firm cannot manage it. For example, if the firm can be closed or shut down, creditors has a right to take their own portions from the assets. The third is that the rights of the owners is called owner's equity. When the firm is shut down, the owners has the right to take and manage its own property after it meets its liability. So the right of the owners are called owner's equity. So assets equals to liability plus owner's equity. This is the simplified formula of accounting equation. Let's see an example. Example 1. November 1, 2090, Getachew deposits $25,000 in the bank account in the name of the Amin Business Center. This transaction increases the asset cash on the left side of the equations. We call it debit. It increases debit by $25,000. To balance the equations, the owner's equity on the right side of the equations, we call it the credit. The credit side increases by the same amount. The equity of the owners is identified using the owner's name and capital, such as Getachew capital. The effect of these transactions on Amin Business Center's accounting equations is shown below. 1. Assets equals to owner's equity plus liability, but we cancel the liability signs. As asset increases in cash by 25,000, the owner's equity also increases by 25,000. This is the Getachew's capital. The Getachew capital. Next, let's see example 2. Getachew is the owner of the operators of Amin Business Center, a service-giving business, at the end of its accounting periods. December 31, 2019, you have an asset of $800,000 and the liabilities of $315,000. Using the accounting equations, determine the following equation. 1, or A, owner's equity as December 2020 and owner's equity as December 2020, assuming that asset increased by $100 113,000 and liabilities decreased by $25,000 during 2020. Let's see the answer. Let's see the answer. This is the answer, not example 3. The asset is equals to liability plus owner's equity. So the asset is $800,000 and the liability is $315,000. And what about the owner's equity? So simply you can minimize. We can subtract $315,000 from $800,000. We get $415,000. But in case of B, the owner's equity as of December 31 of 2020, assuming that assets increased by 130,000 and liabilities decreased by 25,000 during 2020. So, in order to answer these questions, first we determine the change in equities, owner's equities during 2020 as follows. Let's look at assets equals to liability plus owner's equities. This is an accounting question. In 2020, the asset is increased by 113,000 and the liability is decreased. The minus side indicates that decreased by 25,000 plus owner's equity. So you restructure these equations. The owner's equity is equals to $130,000 plus $25,000. We can get $155,000. Next, add the change in equities during 2020 to the owner's equity on December 2021, which is $415,000 to arrive the owner's equity on December 31, 2020 as shown below. So owner's equity on December 31, 2020 is equals to the owner's equity in the year 2020 plus in the year 2020 is equals to individually is equals to the total owner's equity. So the total owner's equity is equals to $415,000 plus $155,000. It gives $605,000 in total. So this is the owner's equity on December 31, 2020. If you like this video, you can subscribe. Thank you.